Everybody wants to know, how can I find a bottom? When can I get long? Where should I be bullish? How do I get in? How do I get out? When should I know? All good questions. You got to know the right question at the right time. If you want to get long, you want what you're telling me is that you think there are going to be future buyers that come to this market. If you're bullish and you want to get long, that means you think price is going up, which means you're predicting that there are going to be more future buyers and sellers, period. So you're trying to chase and follow where you're going to get this buying from. Where are you going to get this future buying? Because that's what we're predicting. We're predicting where price is going to go, but we're doing it by predicting where the buyers and sellers are going to come from to then conclude there's going to be an imbalance, buyers to sellers, and then we can go up. Not a buyer to seller on what gets filled, because that's already beyond us. That's like, well, that's fine. It's already raining. We need to know what's going to make it rain before I'm wet. So when you could follow more buyers than sellers and what the market should do versus what it does, all of a sudden there's clues laying here. Watch what happens. You could see the price if you look at my cursor, sales down. All we know is the market's gotten weak in this sequence. If you're looking to get long or you're looking to cover a short, you're a buyer. Watch what happens. Let me pause it because this happens kind of quick. We get a pink triangle. For nobody that knows, that means at this moment in time, there are more people who want to sell it than want to buy it around where the price is. So, around where the price is trading, there's an imbalance of more people who want to sell it versus people who want to buy it. That's important because what the market should do is go down. Okay, what if it doesn't do what it should do? Is that not important? Anything in life, if you know that something should happen but doesn't, that's always a clue. I don't care if it's in trading or police work or raising your kids. What should happen versus what does happen often leads us to an important clue to make a damn prediction. When you reject a sell and balance, most people don't even see and can follow these sell and buy imbalances, by the way. I don't think there's any tools out there that show this. But when you are able to see a rejection of a sell imbalance, that's what the pink down arrow is indicating. And you see price say, yeah, there's a sell imbalance, but there must be some underlying buying here, or we wouldn't pop above it right away. What should happen versus what does happen. It should go down, it doesn't. That's a damn clue. And in real time, I said, this is bullish. If you're short, you should cover off of this. I don't like telling people if you're bullish, getting long. Everybody's big boys and girls out there. Here's the tools to make your ready, aim, fire. Here's the best tools, but you got to create your ready, aim, fire. If you have a ready to get you bullish, if you have an aim, an area you think is support, and then you have a fire, a trigger like this, you got yourself an idea turning into a trade. Now we play it. You see how quickly price goes above the sell imbalance? That's a rejection. That is a clue that the bottom might temporarily be in, that you might now see something that should happen not happening. It should not jump above a pink triangle like that quickly. That's a rejection. Again, a clue that the market is getting stronger. You see me come in here and write this in at the time I said it, then I draw it up all in and anybody been in the room for any period of time knows that this is something that we teach. It's a rejection. Sometimes you see it with a sell market order. 200 lot comes in, hits the bid, sells it, and the price comes up against it. That's also indicative of rejection. Because when something happens that shouldn't happen, it's telling us that there's some buying about to come in. And if it's future buying, and if it's more future buying than future selling, price of anything is going to go up. Now we get this damn example in the same kind of sequence. Remember, the market's kind of, you could take the market and you could break it down depending on the day into chapters. Like the whole day might be the story or might be the book, but you could break it into chapters. Moves, congestion, big rally, headline that got us weak, a big number that came out to this, and you break it into chapters. And I think that's important. I think when learning and understanding anything, you got to break it down and break it up. So if you take a look at this sequence, which is the effort to go back up, we had another example right in here. Another example. This one didn't happen as quick, meaning it didn't reject as fast, but it didn't go down and it rejected nonetheless pretty quickly. All right. And you'll see my pen come in. And it was the same thing. Hey, listen, if you're looking to get, if you're short and you're looking to cover, this is a clue to maybe take a shot and get out, or you're going to be chasing this thing. Because if you're short, you're a buyer. And if price is going up as a buyer, you're going to be chasing it. If you're bullish, take a shot, get long, right? This could be your trigger. This could be your fire in your ready aim fire progression. So look at this damn thing. What do you see? You see the same scenario of what should happen, doesn't happen. There's a few things that we know before we don't know. Meaning we don't know. When I say that, where the hell's my pen? When I say that, we don't know this is going to happen. We're trying to predict that this is going to happen, that there's going to be some strength. What we do know is the market's rallied into here and it's starting to come off a little bit. What we do know is a pink triangle showing us there's a little bit more of an imbalance of people who want to sell it versus people who want to buy it. And then we're right in here. So before we see the rest, like before, let's clean this up a little bit. Before the right side of this yellow line, we don't know any of this yet. All we know is on the left side of this yellow line, and it rallied, it's starting to come off, and there could be a rejection showing some strength coming into this market to predict future buying, because that's what you're predicting. If you're bullish, you're predicting more future buying coming in than future selling. I don't give a shit as much about people who bought it and sold it. They already are done. I can't bring them back into the game. We already pitch hit for him. He's out. Might as well go to the locker room. He's done. While there's some importance and value of knowing buyers and sellers who shake hands, they're not as important as the people who want to do it. Because if you could characterize accurately that there's a group of buyers that not only the number of them, but that they're anxious, that they're emotional. Well, why are they emotional? Why would they be emotional? Because the dumbasses are short 10 points lower, 5 points lower, 2 points lower. They're stuck short, and there's a whole bunch of them. So these buyers are not just future buyers, but they're emotional because they have to buy it. Why do they have to buy it? Because they're short. And if you're short, at some point, you got to buy to cover, meaning go from short to flat. And that's the difference between trying to find tools that are allowing you to read the right order flow and follow the more important concepts, the more important information or data that's going to help you predict what's going to happen next versus irrelevant drop down boxes of nonsense. Just because a chart platform has a lot doesn't mean it has a lot of good stuff. More is less in trading charting software. It seems like there's a lot on this chart. There's not. It's a few things that different time periods of like different time periods of 3 or 4 damn things. That's all. So there's really not a lot on this chart. Either way, man, the rejection of what should happen is some really good real-time information. Not only are you seeing what most others aren't seeing, but you're knowing what the questions are, how to use it, how to predict off it. And by the way, you want to know what most people don't know, but are tied to, are, what's the word? So most people aren't privy to this data, but all of them are affected by it because they are it. So knowing other people's positions, which most people don't have any sample size of, so most people don't know it, but yet they're going to be victims of it or tied to it. So that's the most important data that's going to give an advantage to anything in the predictive game. Like, let's take an extreme. Let's say you know that Xi in China and Trump are going to put out a statement that they are, are pretty optimistic. Both are going to reach a trade deal. And you know that a minute before it hits the wires. Okay. Number one, not a lot of people know that. And number two, yet everybody is going to be affected by it, right? That's when good information is good. And most people either know something that everybody knows, so therefore there's not really an edge or advantage you could pull from it, or they know stuff that most people don't know for a good reason because it don't mean anything. It's not going to help you predict what's going to happen next. Does it make sense? So you got to put yourself in a position to be in a minority of people who know in information, and then yet it's going to affect everybody, whether they know it or not. It's going to affect them. And so the Chi Trump example would be a very bullish um, clue. Do you think you needed to read 20 books on trading psychology? And do you think it mattered whether or not we're inside or outside Bollinger Bands, or where what relative strength was, or if um, we're above or below the 200-day exponential moving average? When you know 30 seconds before that comment's going to drop that it's going to drop, right? I bet it makes your trading psychology seem like, oh man, that guy's on top of stuff. He is the calmest trader in the world. He's really got his shit together. Yeah, he's trading with the answers to the test. He's taking the test with the answers to it. Again, very easy to be calm when you're finding good locations and you have better advantages over those that are competing, donating their money.